Good to see you all. Good. Welcome to the day after Halloween. Whitney, how was your Halloween with all your kids?
I could wish we could have had this weather yesterday. It was hot. And of course the kids are in the head to toe gear with the masks and all the stuff. So we had some sweaty, sugared up kids at the end of the night.
Now, do you stay around your neighborhood or do you go someplace else?
Yeah, actually, this was the first year. I was a little sad. My daughter, who's 10, wanted to go with a friend in her neighborhood.
It has
So
started.
So I dropped her off, but the friend has an earlier bedtime. So the friend dropped her back off, and then she trick-or-treated with our family for like another hour. So that was a nice little segue.
Oh, nice.
My neighborhood
Good.
is really fun for Halloween. What about you?
Yeah, so our kids are teenagers, so they don't do the trick-or-treating anymore, unfortunately for us. But my husband and I decided last year we went around, we live in Atlantic Beach, we went around on scooters.
Oh,
So
nice.
this year we put sheets and created little ghosts for ourselves. So we went around on our scooters and they have like lights underneath them and it looked like the ghosts were like flying and
That sounds
our
pretty dangerous.
I thought it was too, but we did the little holes, the eye holes with the mesh and we could see through them. So
That's
hello everybody. Go ahead and say hello in the chat if you want to. We can see that you're here.
I do like the trend over the last couple of years. It's become more and more of the people that set up on their driveways, like with tables and like a little tailgate situation. I think that that's really nice.
It
And it
is.
involves more people, more generations in Halloween than knock, knock at the door, open it up. And, it's
Right.
a broader experience.
Right, right. And I think what surprised me last night was that I saw so many adults dressed up,
Oh,
like
yeah.
more than usual. Like it
Mhm.
was like the adults were really getting into it. And some people just go completely over the top with their yard decorations and it's amazing and I love it. It makes it so
Yeah.
festive for the
Yeah, it's
kids.
funny, I probably didn't dress up for 20 years in the middle of my life. You're a kid or maybe even like 30 years in the middle of my life, but then you have kids again, and mine are still little, they're at the age. And so we fully dress up. Although I played it wrong this year. I thought I was clever. I dressed up as not like a regular mom, a cool mom, the Amy Poehler character from Mean Girls.
Hmm.
But I did it in the year of Barbie, where Barbie has claimed everything pink and blonde. And so everybody just thought I was Barbie. Nobody got it. I should have done it 5 or 10 years ago. It would have been a little more on brand, but
That's
I
funny.
tried. I made an attempt, and it was comfortable in my pink velour sweatsuit.
That's great. That's great. Well, hello. Yes. Hello, Kelly. Hi, Vicky. Hi, Joni. Good to see all you guys. Thanks for joining us. I know we've got people still joining and logging in. It is a little few minutes after the hour. I think we should go ahead and get started and people can kind of join in as they can. We are recording this webinar, so you will get a recording of it afterwards if you need to go back and reference it. So we'll go ahead and get started. I'm Lori Lee. I'm a business attorney at the Legal Department for Service Professionals. And here with me today is Whitney Ricci with Ricci Insurance Group. And so excited that Whitney is here to join us and share her expertise on all sorts of business insurance questions. So are you ready, Whitney? Ready to
I'm
start the
ready. I think
convo?
Yes, absolutely. Thank you so much for having me. I love that we have the same favorite clients. So this makes perfect sense, and I'm honored to be a guest here today.
Very good, very good. So Whitney and I have put together the most common questions that we receive, me on the legal side, Whitney on the insurance side. And we're going to go ahead and start off with those questions. And as we go through, I will tell you, we would love to answer your questions. So the chat, I've got the chat up, but sometimes it goes so fast, I can't keep up with it. So if you can please use the question and answer function on your Zoom bar, it says Q&A on there. Click on that and you can put your question in there and Whitney and I can see it. And we will save some time at the end to go through all of the questions. And maybe we've already answered it, or maybe it's a brand new question that we're happy to address. All right, so the first question is for me, and that is the question that I get so often is, if I have insurance, why do I need a client agreement? Keep in mind the context for this is that, most of our clients are professionals who happen to have their own business as they practice their profession. And so a client agreement for them is basically a service agreement that says, this is what we'll do for you. And insurance is absolutely part of the whole equation. And Whitney's going to answer the second part of this question. But on the legal side, it is important for more than just what goes wrong. So, insurance steps in if something goes wrong, but the client agreement addresses so much more than what if something goes wrong. It addresses all kinds of other issues. So it's important for that reason alone. But as it relates to insurance, why is a client agreement important? And is because the client agreement can set out what you are responsible for, so that when your insurance company, if your insurance company needs to step in and cover for you, it knows what you are responsible for. Is that right, Whitney?
Exactly. It's so important. When we were having a chat about this in advance, my first instinct, if I have insurance, why do I need a client agreement? And my gut reaction is good luck getting insurance. If you don't have a client agreement, the insurance company is going to, in some cases, going to make you have one. It's very important. And, as Lori said, if you have the client agreement in place and that spells out who's responsible for what, and this is what we're engaging in business to do, it's very clear. If you're relying on insurance to step in when the wheels have come off, there's a lot of gray area. A claim can become bigger than it needed to be. There may be coverage that was paid out that shouldn't have been, which is going to affect your long-term premiums, your overall profitability of your business, for things that if they had been set up correctly in the beginning, it wouldn't have had this long-term impact on your business.
And I love what you said. You said that the client agreement, the contract, is your first line of defense. And then if they get through that line of defense, it's the insurance then is your second line of defense. And I think that's so true, because you can put things in the client agreement, your service agreement, whatever you want to call it, that says, look, I'm not responsible for this, this, and this. And so they can't ever get through that first line of defense to even talk to your insurance carrier. So if you can avoid a claim on your insurance, why is that so important?
It's your future insurability to get insurance with the most competitively priced and comprehensive policy contract providing carriers, or what you're going to pay. They do take prior losses into consideration when they calculate both eligibility and the premium.
So avoiding a claim with your insurance is obviously beneficial to you. And this is one of the ways that you do it, is through this client service agreement that says, I'm responsible for this, this, and this, but I'm not responsible for this, this, and this. And in any event, no matter what happens, I'm never responsible for more than this amount. And that amount, I love to coordinate with the policy limit.
Yes. And in addition to the financial impact that we're talking about, the insurance and the premium, quality of life. I mean, when we have a claim that's gray and there's all this unknown, I mean, this can be the difference of a claim being open for several years and requiring a lot of your time and you cooperating with all of these steps of an insurance claim, or one that can be opened, client agreement referenced, and quickly closed, either with payment or without payment, in a very short period of time when we have something that we can point to.
Yes, 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 and yes. So that is a great answer. I'll go ahead and move on to the next question, which is going to be for Whitney. And that is, when do I need workers' comp insurance?
Yes. So we have, and I think that it may be because I started as a solopreneur, a single operator myself. I think that we kind of attract these new business owners who are starting up and they're in growth mode, and maybe year one, it's just them. And then they hire an employee, and then they hire their second, and they hire a crew, and you blink and you have this huge organization. And, I kind of feel like it's part of the American dream to kind of follow this path, and you want to start a business because you're really good at something and you want to grow. But there's not this very clear, who tells you exactly what happens at what step in the process. And when Lori and I had the idea to be on this webinar together, we really wanted to talk about where do people get in trouble and how can we intercept them and help course correct them. So getting workers' comp insurance, it varies state by state. In the state of Florida, if you are in the construction industry, it's when you hire your very first W-2 employee. And if you're in a non-construction industry, which it looks like most of the people are on this call, is more of the service professional, it's your fourth employee that you hire. We're going to talk a little bit later in the call, I believe, about an owner's exemption. You can choose whether or not you want to cover yourself or not, but it's the first employee that you hire that's not you.
And then what if you are not in the construction industry? How does that work?
Yes, it's your fourth employee. When you hire your fourth employee.
Okay.
So we do have some clients, if you own like a bakery or a restaurant, a lot of those clients will go ahead and get workers' comp earlier because they're concerned about if their employee is injured on the job. Just whether you have workers' comp insurance or not, that just says who's going to pay for it. You can still be responsible for it. Your employee can hold you liable for them getting hurt when they're on the job for you. So when we talk about when you're required to carry it, that's just when you're going to face penalties. You're going to face fines for being out of compliance with what the law requires you to carry. It's first employee for construction industry and fourth employee for any non-construction industry, which is going to be most of the service professionals that are on this call. And I tell you, if you're like me and you're working, you got that first one and it's a whole big thing. And then the second one, and then like you kind of blink, and that 4 to 5 thing, it's very frequent that we have folks calling us late when they were like, oh my gosh, I didn't know I have 6 employees. I need a quick get this before I get in trouble. And the fines are steep. If you get caught with being non-compliant and not having the workers' comp that you're required to carry, your fine is actually double what your workers' comp premiums would have been for the prior 2 years. So we've had clients calling up our office owing tens of thousands of dollars in fees. Yes. So it goes back, I think our theme, we've already kind of got our theme, do it right the first time to avoid the bigger problems later.
Yeah. So that's when it's required. But let's go back to the liability side, right? Because we're doing insurance versus legal. So on your side, it's required that they have it. On my side, I'm looking at the legal liability of a business, and you can be responsible for injuries of your people, right? Your employee.
Yes.
And in that case, like you said, like you would have to pay for their medical and things like that. So would you recommend getting workers' comp before it's required?
Yes, I do. And it's so affordable. I mean, a lot of these policies that we'll write for like a dentist's office or an attorney's office, a CPA firm, I mean, we're looking at like $500 if it's only a couple employees and they're below the required amount. And for service professionals, even when it's a bigger organization, if we're talking people that sit at desks and type, work on computers, workers' comp is really, it's been the only line of insurance that's been steadily decreasing in premium over the last several years in Florida.
So it makes sense to pay the lower amount and have some coverage for if your employees get hurt, rather than try to pay their medical bills. Yeah.
Yes, okay. I think that it's a good ROI for that peace of mind.
That's right.
And it's also, there's a little bit of a, gosh, how crappy do you feel if you are the employer? And I mean, I take it very seriously. My people that come to work for me, they're giving me a big chunk of hours of their life to come and work for me and help me build this business, help us serve clients in our community. And I feel very responsible for them. And if something happens to them on my watch, I want there to be coverage to pay out for them. Another thing that I would recommend, especially when it's a new policy and just starting out, it's only about $10 a month on a standard policy to increase from $100,000, which is the minimum required per person, to $1 million. And for a family, like God forbid, you have a situation where somebody is on the job on company business and they're in a car accident. Maybe this is like a clerical person, a salesperson, but they're driving in the middle of the day in between sales calls or a conference or whatever. Show me a better $10 you can spend than guaranteeing that family the buy up to the $1 million over 100,000.
Good point. Great point. All right, so I think we answered that question. And just a technical thing here too, if you're watching this live and not on the recording, you can choose how big the screen is on our slides. If you want to move the slide a little bit smaller so you can see our faces, you just grab it in the middle and drag it. Okay, next legal question. Should I provide insurance for my independent contractors? So we just covered employees, right? So let's talk a little bit about specifically about independent contractors. So can I just ask you, does workers' comp cover independent contractors?
I love how this is like a build. It's like step one, get your contracts right. Step two, what are we going to do for our employees? And then we've got here, this goes back, what is your agreement with this individual? And from an insurance standpoint on workers' comp, and this year especially, we hear all this buzz about this crackdown on uninsured independent contractors, uninsured subcontractors. The insurance company is going to say, if this person is working for you, if you're paying them for work for labor, and they don't have their own workers' comp set up or a valid owner's exemption, and they have no other employees, then they are going to charge you workers' comp premiums for them at audit at the end of the year. And that is that messes folks up if they weren't planning for that. So that is the thing. If they're working for you, if you're paying them to work, we don't care from an insurance standpoint. If you file your taxes as a W-2 or a 1099, as far as the insurance company is concerned, if they're transactioning or they're doing work on behalf of your business, if they don't have their own workers' comp or properly exempt, then they're going to be covered under your policy because they would have to pay a claim and they're going to charge you the premium for that.
So let's talk about that then. So in my mind, independent contractors, when I'm talking to our clients, independent contractors, how we classify them, are the people, the workers inside your business that are helping you to produce what you sell. So they are the workers, because people get confused about independent contractors and vendors. So vendors are separate businesses who are providing you with their service because you need their service. Independent contractors are with you and they help you produce what you are selling to your clients, customers, patients, whatever you call them. So that would make sense on the workers' comp side, because they're basically inside, they're under your roof, they're inside your business helping you produce.
Correct.
So let's talk about other kinds of insurance other than workers' comp for independent contractors. So a lot of times our professionals will outsource different services, like law firms outsource to contract attorneys, mental health professionals outsource to contract therapists. I mean, we all do this. And so what kind of liability insurance do you see people doing or needing for those types of independent contractors?
Right. So I'm going to back up real quick and make one more comment on the workers' comp piece for independent contractors, because I do want to be real clear on this. I feel like I spoke only on you're accidentally covering them, but you should be covering them if they are transacting on your behalf, and there wouldn't be an expectation that they would have their own policy. You would report their wages, and that's something that you should budget for, because I could see somebody who's never been in this position before, and we're talking a lot about what to know when you grow, when you're smaller, not counting that payroll and that initial projection, and then owing at the end of the year because you didn't realize that this independent contractor for salespeople, if you've got like a hair salon is a good example. A lot of times those folks are all paid as independent contractors, but they're covered under the business's workers' comp, because if they get hurt when they're on, we want there to be coverage for them. Now, going to your next question about general liability and other lines of business, how is the wages that are paid to subcontractors, how is that viewed? Generally speaking, when an insurance company takes on a risk for a new business, they use certain metrics for how they calculate the overall size of the business. They call it exposure. So those are usually going to be sales, payroll, or square footage. For service professionals, a lot of times it's the square footage of the office. So if it is a policy that's going to be based on payroll, there is a subsection that focuses specifically on wages that are paid to subcontractors and wages that are paid to vendors. So that would be something when you're getting your insurance that is asked on the application and is accounted for. And that coverage should be, I mean, if you're answering it correctly in your policy, and we're doing a lot of assumptions here that the policy is written correctly, but if the policy is written correctly and placed correctly with the carrier, if there are folks that are transacting business on behalf of you and explained and disclosed when you set up the insurance and you read your declarations page, and it shows this is the type of business that we're transacting, this is our payroll, sales, this is the amount of money we're paying to subcontractors, then coverage would extend to them. Now, there's not a one size fits all for all different types of business structures. Sometimes there's a situation where you may have, pops into mind, a med spa, for example. It's typical for a med spa that the person that does the Botox is usually an independent contractor. And in that case, they do have their own insurance, because Botox and needles and all that, that's a different exposure. So you'll see the injector has their policy set up. They usually have professional liability as well. And then the spa itself has coverage that covers more, maybe facials and hair and nails and that type of thing. But there would be no coverage under that policy for the activity of that independent contractor.
So that leads me definitely to the next point on the legal side, is that your independent contractor agreement should definitely specify whether or not your independent contractor is required to have their own insurance. And I would say that it's not a bad idea to go under the general rule that you want to have your independent contractor have their own coverage, and then make the exceptions as they come through. So you say you're hiring an injector for a med spa, for example. The rule is that you have to have your own coverage. But if you are maybe hiring an esthetician that's doing facials, you can give them an exception if they are covered under your current policy. So I think the key there is to make sure that you've got two things going on. One is your legal side on the independent contractor agreement, make sure the wording is correct there, but then always go back to your insurance agent, right? And communicate to them and be like, hey, this is what I've got going on. I'm growing, I'm adding this. How does this fit into my policies and my coverage that I have now?
Yes.
So you always want that, right? For them to come back.
Yes, as that when in doubt, over communicate. And if you're working with someone who's been around a while and has some experience in the field, they're going to be able to advise you on what's typical in your industry is this, what's typical in your industry is that. So I'm not going to make the same recommendation for a client who's setting up a hair salon as I am for a real estate brokerage, as I am for an attorney's office, as I am for a plumber. These are all different business models, and they all have an aspect of an independent contractor in there. But what is typical, and when I say what is typical, almost all of them are set up the same way within their industry, but it's different industry by industry.
Gotcha. Very good. So I think we've covered that one. Any last pieces of wisdom on independent contractors?
I mean, just bookkeeping best practices. You want to make sure if you are expecting and requiring these folks to carry insurance, that you're getting a certificate of insurance every year. There's great software depending on the size of your business, if it makes sense to invest in that, but a little bit of a bootstrap way to do it. If you're new, we're talking about what to do when you grow. Boy, when I started, the things I could do on a Google sheet, but a good old Google sheet that shows, the renewal dates, and then monitor it, check it every month and see, okay, these folks, their insurance is coming up for renewal. I need to make sure that I reach out to them to get an updated certificate. We'll see, it's not uncommon that there will be a provision in that contract that says that a current certificate of insurance must be maintained on file in order for payment to be released. That's usually the, hurry up and get it. They want to make sure that they get paid. And that's where it comes in an audit. You can be doing all the right things. You can be saying, these are our requirements. Here's in my contract where I say you're required to have insurance. But when the auditor comes in and they see that you've paid $500,000 to Joe Schmo, where is Joe Schmo's proof that he has insurance? You say he has insurance, but where's the proof that they have insurance? And so they had insurance 5 years ago when you first signed up with them, and they were an owner operator, but now, and that's when you were paying them $30,000 a year, but now you're paying the same person $500,000 a year and you haven't updated it since then. So having good books will set you up to have a much more friendly audit.
Okay, so speaking of audits, what is an insurance audit and when do they occur?
Yes, so again, we're building. So we discussed how, and typically it's going to be for general liability, sometimes professional liability, which is E&O, and workers' comp are the policies that are most traditionally audited. And what an insurance company does, and this is especially important to understand when you are in growth mode. but you have a conversation with your insurance agent, or maybe you fill out an application and you do it over email. But there is an understanding of the business looks like this. The business is this big. The exposure, that's the word, the exposure is X. That's usually based, again, payroll, revenue, or square footage. If you look at a company like a plumbing company, for example, one that does $1 million in sales is a far smaller business than one that does $50 million in sales. And that translates to the likelihood that they're going to break a pipe and flood a house this year, right? So the bigger company is going to pay more than the smaller company. Now, on the general liability side, you kind of want to give your exposure to be as close as possible without going over, because you don't get any money back. That's not the case on workers' comp. Workers' comp, when they audited it at the end of the year, they will give you money back if you've overpaid and your payroll was actually lower. So at the beginning of the year, you do your application, you say my exposure, whether that's payroll, sales, or square footage, is X. And then at the end of the year, the insurance company has the right to, and we see it with increasing frequency. Some industries get audited every single year with every single carrier. Some, it's every couple of years, but they have the right to come back and say, okay, Lori, your insurance is up for renewal. You said that your exposure was going to be X. How much did you actually do? And they're going to want you to turn over the financial reporting to support that. So if you started and you truly thought you were going to do $1 million worth of sales, but you had a great year, you didn't expect it, you got these new clients that came out of nowhere and you did $2 million in sales, you will actually owe double the premium that you initially paid. So our mantra that we shout from the rooftops when we set up clients, especially when they're new and they're in growth mode, remember this, you grow, you owe, you grow, you owe, you grow, you owe. And we will even show them on their deck page, like, this is how your policy is set up. You're paying X amount of dollars per 100 of payroll or per 1,000 of sales, whoever it is, and we're basing it on this much. If they come back at the end of the year and you start growing, and look, we can change it mid-year if you want to start paying in a little bit more early. It's not required to do that. That helps some people with cash flow. But the big overarching message is, remember at the end of the year to be prepared that if you grow, you're gonna owe. The other thing that they're going to be looking for, like we just spoke about, are uninsured subcontractors. So you're going to want to make sure that if you're saying this is not covered under my policy, it's covered elsewhere, that you have proof. Because the last thing you want to be doing is paying this person all this time and you paid them a considerable amount of money, especially if it's in a class code that you don't even do. We'll see where somebody does something pretty vanilla and they outsource the risky stuff, and that person is uninsured. You have to pay their rate for what they're doing. Say you have a real estate company and you have a maintenance crew that you have that goes in and does all your cleaning and your demo work when you go to sell properties. If they're uninsured, you're not paying real estate office rates for them. You're paying the construction type rates for them, and it can really, really mess people up.
So getting that proof of insurance from independent contractors, that
Yes.
is critical. And during an audit, to be able to prove that you don't need to pay for them. They're covering themselves.
And the just overall understanding that this is very normal. Yes, you have to do it. How it works, when we set this up, we think it's going to be this. At the end of the year, if I'm in growth mode, I'm probably going to owe in, and I'm probably going to go owe in every year as long as I'm growing. The alternative to that, like I said, on the general liability side, you usually don't get money back. So people usually don't want to overestimate. It usually feels a little safer to say, okay, I think I'm going to do this. I'm going to plan really well. I'm going to be aware quarter one, quarter two, quarter three, how I'm pacing with how I projected, and I'm going to set money aside if I'm in growth mode.
Now, how do we as business owners get to choose the type of exposure we report, or does the insurance company tell us, does it based on sales, payroll, or square footage?
The insurance company chooses that. And it can be different. We can have the same, exact same type of business, and we send it out to market and we get quotes from all of our carriers back. And half of them may come back and say they base it on payroll. Half of them may come back and say that they base it on sales. We just had one that an agent of mine was working on yesterday. There was a $5,000 swing between one of the companies based it on square footage, which was considerably lower, and another one was basing it on payroll. So that's the value of being an independent agent, having options for our clients. We obviously went in that case, and the coverage is no different. It's not like they get more coverage if it's based on a certain exposure. That exposure is just used as the metric for the insurance company to measure how big, how sizable do I think that this business is. And when you look, we talked about this a little bit earlier, but if you look at a business like an insurance agency, for example, we are typically based on square footage, because the risk of us having a general liability claim, which is the business being liable for any bodily injury or property damage. Usually that's going to be the slip and fall type stuff. If we have 100 clients and we sit at these desks and we work at our computers, or we have 10,000 clients and we sit at these desks and we work at these computers, the office is only as big as the office is. It's not like we have, we're going to have all these additional people. Now with that, in a pre-work from home environment, usually as a business grows, you'd occupy more space. So that may be something we see change a little bit. But for the time being, that still stands, that's a pretty good metric of an office type job and their true risk exposure for that type of risk.
So most professionals who have an office environment, most of the time their exposure is going to be based on square footage. And then
for general liability, yes.
For general liability. Mm-hmm. And then sometimes, depending on the other types of industries, they may be on square footage or they may be on sales or
payroll. Mm-hmm. Now, the difference for professional liability, which is errors and omissions, those two terms are used interchangeably. That is not based on square footage. That's going to be based usually on sales. Sometimes they'll put a payroll component to that as well. But that is a little bit different because the amount of, that's your work. That's if you make a mistake doing your work. So to take me for an insurance agent, for example, I'm a lot less likely to forget to bind a policy. You say, I want to buy insurance from you, Whitney, and I say, great. If I have 100 clients, I'm going to get that done. If I have 10,000 clients, it's a lot more likely that one of those things may slip through the cracks. And that's a common errors and omissions or professional liability claim for insurance agents, is the person says they want to buy, the agent says, yes, okay. And then there's a breakdown and the coverage is never placed. And then a claim happens and the policyholder is uninsured. That's not general liability. That has nothing to do with the square footage of my office. That has to do with the mistake that I've made. And now I've left, there are consequences for my client. So, which, by the way, I've never done them. Let it be known that is not a speaking from personal experience. For the record, let the record state.
Let the record reflect, Your Honor. So of the three types of policies we've talked about, we as a law firm have all three. So workers' comp is based on our payroll. We have general liability, which is based on our square footage. And we have professional liability, which is based on our sales. So we as a law firm have exposure measured by all three, because workers' comp is payroll, general liability is square footage, and our professional liability is by sales. So I think what I'm hearing is that's like a typical thing for professionals in an office environment.
That's correct. And if you look line by line with each of those business, workers' comp, we're covering if your worker gets injured on the job. The more payroll you have, usually the more workers you have, the bigger that risk is. General liability, in a case like yours, we talked about square footage, is those claims are usually the slip and fall type things. So for service professionals, how big is your office? How much foot traffic are you having? That's a pretty good indicator. And for professional liability, that's how much work are you doing? And sales is usually the best reflection of how much work there is out there where there could be a potential mistake.
And so I think the maybe some of the exceptions to that are the types of professionals that don't necessarily have an office environment, or they have an office environment, but there's some sort of added risk to it. Like you mentioned, some sort of body contact injection, some sort of health, some other sort of risk. There might be differences there.
Yeah, and sometimes there are just curveballs. There could be a case where a specific insurance company has written a whole lot of a particular type of risk, and they've realized that for them, actuarially, that payroll is a better indicator. And you'll see that some, I'm going to pull kind of a weird one, like funeral homes, for example. Like, how important really is the square footage? Or is it the sales or the payroll? Or, so that you could see that being rated different ways from different carriers. And the carriers, they set the rates based on what their actuaries say, what they think the risk is, and how they think it's best to structure the policy. And then we, as the independent agent who deals with the client directly, we gather all of the information, we send it to all of our carriers, we review all of the quotes that we get back, and then we make a recommendation for each individual client on what we think is going to be best for them.
So the bigger picture point of the audit that I'm hearing you say is that whatever type of exposure is being measured at the end of the policy, don't expect that year is gone, you've paid for it, it's done. They're going to go back and recapture the money that they should have had the exposure been correctly estimated. Okay.
Bingo. And it's not every policy every year in every industry, but example, construction boom in the last couple of years. All those policies are getting audited. 8 years ago, they weren't auditing every policy every year because it was a little bit of a different market. There's also the bandwidth. Do they have the employees to perform the audits?
They might want to, but they don't have the capacity to do it.
Right. Trust me, they want to get paid. So if they know that the exposure and the money is out there and they have the capacity to get it, that's when we see a ramp up in audits. When businesses are more flatlined and they don't think that there is as much of a opportunity for them to be collecting on the audits, then they're probably not going to invest in sending out the overhead and sending out an auditor to do the actual audit.
What about if there's a claim? Are audits automatic when there's a claim?
Not necessarily automatic, but I would say there's definitely a trigger at the time of a claim to make sure that whatever exposure has caused the claim is covered in the original policy. So sometimes that could be, okay, my client has a 15-year-old child and they get in a car accident when they're driving on their learner's permit. The insurance company would be like, okay, ping, this is covered. They're covered to drive under their permit, but they're not listed on the policy. But let's make sure that we have this policy flagged to add this driver as soon as they get their regular license and start collecting premium for them. Flip side of that, if you have a client who's their policy is rated as being an attorney, but a storm comes through and they're just, the best neighbor attorney you could be. And they're over at the office next door and they're up on the roof and they're helping tarp the roof because they're preparing for the storm. And then they fall through the roof. What were you acting as an attorney? Is there coverage for tarping a roof under your business policy? Or is this more personal exposure? Do we get into, do they have an umbrella or the policy that covers the building itself? Could there be coverage there? That's where it gets dicey. But that could send up a trigger to review. Not necessarily an immediate declination if the exposure is not there, but it is a good time to have a check and a balance to make sure that we're aligned. And another thing might be if there's any, say that someone has reported it and they say that the biggest client they have, they do $10,000 worth of work for them in a year. And then there's a claim and it comes out that that specific contract is worth $100,000. Then there's a flag, we may be underreporting the exposure if it's in an industry where the policy is based on sales.
So what I'm hearing you say is it's very complicated and business owners need to talk to their insurance agent on a frequent basis.
Be best friends with your insurance agent and your business attorney. That's the takeaway. We'll put that in the sizzle reel. We got to edit that part.
I love that. Yes. Number one takeaway. But BFFs forever. Okay. Next one. Should I have car insurance? You mentioned car accident, so this is a good lead in. Should I have car insurance to protect my business? And we put this on the legal side because I want to address exposure on the legal side. And then I know on Whitney's insurance side, it's very complicated. So we won't expect her to tell us all of the details, but she can kind of give us a little bit of overhead. So car exposure, automobile exposure on the legal side is probably bigger than it has been in my recent memory, and I've been practicing 20 years now, always as a business attorney. It has really become one of the bigger concerns for business owners, and not just owners, but businesses themselves, because with people working from home, it tends to mean that, business errands might be run more often than they would normally. So if you have an employee going to the post office because they're picking up mail, or if they're going to, post a package, which would otherwise have been done at the office and they wouldn't have gone anywhere. Now you might have some work from home people traveling in their personal cars to do this. Or a lot of people are putting signs on their cars to advertise their business. And so that becomes then an issue, because now you've got a magnet that you've stuck on a personal car, perhaps, and you're using this as to market your business. Maybe you're new and you're growing and you've got these things going on. Or maybe, you've had a big tax bill and you say, you know what, it makes sense to put the cars in the business instead of in my personal name. All of those become exposure for the business itself. And if a car accident were to occur on a business errand, it becomes part of what, personal injury attorneys look for. So if somebody gets into a car accident these days, you've seen all the billboards, you've seen all the TV commercials.
I know about the billboards.
Yeah, right. I mean, they're prolific, and some of them are our clients, and they're wonderful people. We represent law firms of all kinds. They're wonderful people. They serve a purpose. But there are a lot of them, and it doesn't necessarily mean that every claim is legitimate or valid, but they do file the claims, and they're always looking to see, like, where can we recover for the damages that's happened in this car accident. Number one, who's at fault, and then who's going to pay for the damages. And those are two very important. So even if you're at fault, they're still going to look to see who's going to pay for the damages. Is that going to be you, or is that going to be an insurance company? And if it's going to be an insurance company, whose insurance company is it going to be? Is it going to be you personally, or is it going to be your business's insurance? And if you think about it from a lawyer's point of view, they're trying to put in as much security, as much access to recovery as they possibly can. So they're going to put it all in there to try to figure out.
Lori, you said that in the most polite way. That is not how we describe what they do.
Again, giving them the benefit of the doubt.
and now our webinar is PG-13.
That's right. All PI attorneys, we love you. We really do.
A very wide net is what they do. Yes.
So how do you've got a business owner that comes to you with all that. And I know I just ran through a million complicated scenarios for you. So just like high level, what would you tell them?
Yes. Okay. So first thing, we start with what is the exposure, the actual exposure that you have, and then we tailor the insurance to that. So a lot of times people will say, okay, well, I bought the car in my business name. Now do I need commercial insurance? Well, it's not as simple as that. First, we want to see, well, how do you use the car? And if you just put a vehicle in your business name because your CPA is advising this as part of a tax strategy, but all you do is drive to the office and home and work, and you use it no differently than you would a personal auto policy, we can still insure it on a personal policy and just list that and this is different carrier by carrier, but generally speaking, there are options that it can still be insured personally and have the business listed as an additional insured. Depending on how you use the car, sometimes it can be personal auto policy owned by a business and rated for business. Like a realtor is a good example. That's pretty common because they do drive around and they do have sometimes the signs and stuff that are on there. And then some carriers and some industries, if you've got the signage on there, it needs to be commercial no matter what. So first thing, we want to make sure that the auto policy itself is set up correctly if you have an auto that is owned and associated with your business. So if that's what we're talking about, and that's where that's being driven around, and we get that right, then that part check done. Now we enter into this gray area where we talk about, okay, well, what about if your business doesn't own any vehicles, or you own a vehicle, but your employees drive their own cars sometimes, and that starts this little gray area. So what I've seen as a best practice, and I have to add a little disclaimer, I am not a business attorney, so I'm not qualified to advise you on how you should set up your business, but I can tell you what we've observed as best practices in the industry. For our clients that have employees that use their vehicles a lot, they're running around doing inspections or things like that, they typically have a requirement that the employee have a certain minimum amount of insurance on their own policy to raise the threshold of, if there is an incident, at least there's this much before it comes back to the company. So that's a good step one mitigation method. Step two, under your general liability policy, depending on the carrier, depending on the state, depending on the class of business, if you have exposure where there are people driving vehicles on company business ever, but especially if they're doing it on a regular basis, there's an endorsement you can get for hired non-owned auto that would cover exactly that. And that's what the attorneys are going to look for. If there's a situation where Jenna's running to the bank on her lunch break and causes a car accident, and she's on the clock running company business, they're going to look to say, okay, first, let's max out Jenna's personal auto policy, and then let's go to her boss's general liability and see if there's an endorsement there for hired and non-owned auto. Now, a lot of the service professional industries, you can get it and it's very affordable. Oftentimes it's included automatically with some of these packages where they bundle up a lot of other things, but that's what that pays for. The driving around of vehicles that are not owned by the company, but they are doing company business. It's a conversation you really want to have with your insurance agent who writes your specific policy, though, because there are some businesses that they just will not cover. We spoke yesterday about like a pizza delivery company. Pizza delivery company, the nature of that business is the employees are driving their own cars around delivering pizzas. Those policies are very expensive and it's a standalone policy. It could be $30,000, $40,000 a year, where we might be talking about $20 for an endorsement on a policy for an attorney.
So message I'm hearing
did
here.
I make it more confusing or did I provide clarity?
Lots and lots of clarity. And my message here that I'm hearing is, Jenna, do not get into a car accident. She is on the webinar, so she's hearing me.
But I mean, it is one of these things on the state exam for your insurance license. They are always, giving you these scenarios. And in Florida, especially because we're also a no-fault state. So it's like, here's this complicated thing that's happened, and they give you the whole scenario and they're on the clock and this coverage exists and this coverage doesn't. And then they flip it. And then they say, okay, now they're not at fault. And who pays in what order for what, for what part of it. But the big message takeaway is, if you're considering owning your vehicle in your business name, consult with your insurance agent about how you're going to set that up. And they really want to know how. It's more important how the car is being used than how the car is owned. You definitely want to disclose how the car is owned. That's important from the legal aspect, but the rating factor is usually how it's used. And then if you have exposure in your business where cars are being driven around that you don't own, you could potentially add coverage to that on your general liability policy. It's called hired and non-owned auto coverage.
Excellent. Thank you for that answer.
Yes.
All right. This one comes to you. What do I need to know before I go after bigger contracts? And I think just to set the scene on this one, I think what we hear is that as businesses grow, and they're targeting bigger clients, bigger companies, and they go after these big contracts, and then they get them. What should they do?
Yes. So in this, I get a little bit emotional about this because, like I said, I don't know if it's because it's my own roots, but I call them the dream weavers. I tend to attract the dream weavers, and I love it so much. I love a small business that starts and we get to watch them grow and we get to root for them. I almost feel like I get kind of emotional about it. I really have like a sense of pride of the success of what a lot of our clients have been able to do over the 9 years that I've owned my agency, and 16 years all in the insurance field. So it's been a lot of life. So what we've seen is you have a smaller business and they get some traction, right? And what we typically see is somebody works for somebody else and they're really, really good at that thing. And then they go start their own business and it takes them, they get their ramp up, and then they get an opportunity for the big break. And they get an opportunity. The ones that we see that we're going to talk about the most are maybe a contract with hospitals, schools, or like new home builders. that's the kind of contract that can change your life. It can guarantee that you're going to be able to hire X amount of people, maybe an entirely, other crew. You may be able to support an additional location, pick up a couple more vehicles if you're in that type of a business. But a thing that's often overlooked is, what is the insurance implication if I take this contract? And we've seen this as a true example. A client of ours who was paying $5,000 a year for his insurance had an opportunity to go after one of these bigger contracts. And he called us, and I was like, I'm really excited for you, but pump the brakes. Hold on. It's very, very important for you that we run these numbers, because I've seen this before. And not only is this going to be a huge amount of an increase in exposure, the company that you're with currently is a company that covers the little guys. And they exclude coverage for any of these bigger contract type of clients. And a lot of insurance policy contracts do. They say, no schools, no hospitals, no track home builders or things like that. So we were going to have to move him to another carrier. We went through, we got the quotes. The actual numbers, his insurance was going to go from about $5,000 to about $50,000 a year, which is,
oh my gosh.
that's a very, very, very important thing that
Wow.
you to know before you go into playing in bigger sandboxes and taking on these bigger clients. So,
and build into the prices and fees that you charge those bigger clients. I'm not sure if I'm frozen or if Whitney's frozen. If you guys can hear me, can you put something in the chat so I can know if it's technical difficulties on my end or Whitney's end? Ah, Whitney is frozen. Okay. So I'll pick up there while she reconnects. Fantastic. Thank you guys. I see you in the chat. Thank you for that. So she has a really good point, and that is, once you get that quote for whatever that new insurance would be, then you can go back and build that into the contract. Because otherwise that could definitely eat into your profits. I mean, 5,000 premium to a 50,000 premium would be a very big surprise. It may or may not be that you still continue to go after that contract. It's just that you have to make sure that you reassess the benefits to your business of getting that contract. And if you can build that into the fees that you charge that big client, then you're back to rolling. And there's Whitney, it's being back to rolling.
I'm sure that what you said was right.
I love your faith in me.
I'm on my hotspot. I'm back on the hotspot. But hopefully we didn't cut out before the part about the tremendous amount of success that followed. But thank goodness that he knew this and was able, before he went all in, was able to take the new information that he had about the considerable implications on his insurance premiums, build that into his contract, and still make it a profitable deal. So
that's
just
exactly
be a little
what
cautious.
I said while you were gone. Perfect.
Yes. You got a second life coming as an insurance agent. Hopefully not. It's a lot. It's a lot to be in insurance right now. I want more peace for you than that, Lori.
Well,
a second lifetime.
Yeah. Yes, absolutely. And I do know, I think that means we are done with our questions. And if you'd like to have a question, if you have a question that we haven't answered, we do have a few minutes left in the webinar. If you can go to the Q&A function on the Zoom bar, click Q&A and put your questions in there, and we are happy to answer them. While we're letting you do that, I do want to just get Whitney's general sense of the insurance industry in Florida. I know that's been changing rapidly. Just generally, whether it relates to business or home ownership or automobile, like, what are some of the quick trends that you're seeing?
Yeah, well, I mean, to be brutally honest, for the next, still going to be at least another year, maybe another 2 years, we do need to buckle in, because across the board, because of the reinsurance market, we're still paying these higher premiums than any of us planned or budgeted for. And we have fewer options. Now, we do have some legislation that passed and went into law earlier this year in March, and we are already starting to see a glimmer of the effects that that's starting to have. We're starting to see carriers open up a little bit more capacity. Big picture, that legislation should make Florida a little bit more friendly for insurance companies to do business. And what we need to drive down the rates is competition. So we need more carriers to come back into Florida and want to do business. And, I think that it will probably be another 18 to 24 months before we start really seeing that. But in 3 years, I think that we'll be possibly even seeing some rates come back down. But the reality, if you want to know what to do, is budget a little bit more. Unpopular.
And that's for business insurance and personal lines?
Mm-hmm. For all business, except for workers' comp. Like I said, workers' comp has actually been coming down a little, which has been nice to see. And if I could add a little bit more, we didn't talk at all about in workers' comp, which is one of my favorite lines of business to sell. It is a great opportunity if you have insurance already set up for workers' comp, or if you don't, you're thinking about getting it, to have a conversation with your agent or with me or one of my agents, preferably, about a potential workers' comp dividend plan. In the state of Florida, the rates for workers' comp are set. So they're going to be pretty much the same carrier to carrier to carrier, but we can still make the different companies compete based on what kind of a dividend plan they're willing to offer, which is free money back at the end of the year. If the company's profitable, there sometimes is a correlation to if you don't have any claims, then you get this money back. Sometimes just everybody on the plan gets money back, but that's been a really positive trend over the last couple of years in workers' comp. We've been able to get really, really aggressive. It used to be if you could get 5% back for a client, that was great, but now we're seeing 10, 20, 40% in some cases. It's wow. Awesome. Yeah, I've gotten to deliver. They used to let us sometimes hand deliver them, and I had the most fun one when we were still able to hand deliver them was almost a $25,000 check. I was like, nice. Here you go. And it was actually on my birthday that I got to do that, which is kind of one of those fun birthdays ever.
By the way, and it's my birthday. Here's a bunch of extra money if you want to buy me something. Feel free. Oh, that's awesome. All right, guys. Well, thank you for all of your expertise and knowledge today, Whitney. I don't see any questions in the Q&A, so that I think that means we must have covered all of their questions today, which is
great. Well, we can follow up. I know that we discussed that we wanted to provide some resources for the folks that attended the webinar. I know we were going to provide the specific instructions and a resource that gives, oh, here we go. Perfect. I think that this is for yours. For ours, we didn't get it together in time, so it will be done by Friday.
That's all right. We're going to send this out in an email, the recording, and so Whitney's free resource can come out in the email to you with the copy of this recording. And we'll make sure that happens on Friday. For us, the independent contractor checklist we thought was probably the most important and relevant to this conversation, since that's the biggest variable on the legal side, is setting up your independent contractor relationship. So there's a checklist for you if you want that QR code. If you don't do QR codes, this is also on our website under Workers tab. You can download it from there as well.
Okay, great. And ours will be for folks when they're getting set up, that workers' comp exemption for owners if they don't want to pay workers' comp wages on themselves, if they don't want to be covered under workers' comp, the steps that you go through to file that. And there's an extra step that they just added, I believe in July of this year, it just kicked in, where you have to watch a little video. So it just includes some additional information about that, as well as if you are the person that is in the hiring seat and you are reviewing when is it acceptable for me to take a workers' comp exemption versus when should they really have the workers' comp insurance, that will be included in the resource as well.
Fantastic. And thank you all for attending with us. It was great spending the time with you. And as you can tell, Whitney and I love talking shop about all of this. So if any questions occur afterward, please feel free to follow up with either one of us, whichever has the answer. We're happy to respond. And we look forward to seeing you at our next webinar. Thank you,
and Lori, I also want to say a kudos to you. This is so wonderful that you are putting this series together for small business owners. This type of information is not just readily available out there. So I know it's a big effort from your team. I know your time is super valuable. So I think it's just really, really awesome that you're giving back in this way. And thank you for including me. It's a privilege. And I look forward to working with you again in the future.
Sounds wonderful. Thank you so much, Whitney. Thank you all. Have a great
great
rest of
day,
your
everyone.
day.
Bye.
Bye-bye.